Transparently, right now, we really only touch the health benefits. We do have options for vision and dental, but pretty soon we want to layer in these additional options for you. And the hope is we can have it function fairly similar, where everything moves pre-tax.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Now, let me tell you a little bit about my guest today. Marshall Darr is the co-founder and chief executive officer of StretchDollar, a progressive health benefits startup with operations in San Francisco, California, and Philadelphia, Pennsylvania. Marshall's career trajectory prior to founding StretchDollar reflects his commitment to enhancing the workplace experience for small businesses. He spent over a decade contributing to the mission, initially as the head of lifecycle marketing at Gusto, a payroll service company. Later, he played a pivotal role as the VP of marketing and partnerships at Decent, a health insurance startup that he helped launch. Marshall's early entrepreneurial experience in the real estate industry provided him with a firsthand understanding of the challenges faced by small business owners. His dedication to making it feasible for more small business owners to provide for their employees aligns perfectly with the mission of StretchDollar. If you're seeking innovative solutions for improving employee benefits and enhancing your business, you can find inspiration in Marshall Darr's journey and his commitment to supporting entrepreneurs. So, Marshall, welcome to the show.
Oh, thank you so much for having me, and a very well-researched intro. I appreciate that.
Well, I'm glad to have you here. Before we get into questions on the subject for today, I would love for you just to share your story about how you founded StretchDollar.
Yeah, we're still relatively young as a company, and I feel like early companies, it's hard to detangle when the company started and like the background of the founders, but my co-founder and I met back at Gusto almost a decade ago, and we worked on a lot of things together there. But one of the biggest projects we worked on was we helped Gusto roll out the health benefit offering to small businesses. And by the time I left, they had about 200,000 small businesses on the platform. So we were quite busy, but we noticed that like the traditional small group plans that these small businesses could sign up for were very expensive, pretty limited network, and just difficult for people to get over the hump on doing. I went from there to a company called Decent that was trying to build an end-to-end health insurance company to bring down prices and increase access to things like free primary care. And Decent was an incredible learning experience. I was there for 5 years, but ultimately sort of landed on the thesis that I don't think the best option for very small businesses is a group plan at all. I was running, among other things, sales over there, and I remember consistently hearing feedback from small business owners as we got deeper into the process where they would get a little overwhelmed by the complexity of group health benefits. And they would bring up that they just wish there was a way they could offer their people cash and have them pick for themselves, which is sort of what motivated what we built at StretchDollar. StretchDollar is a very simple platform where companies can compliantly offer their employees tax-free funding that their employees can then use to select and purchase health plans under the guidance of our brokerage. So we like to say we save small employers about 100 hours. We open up more options for the employees, and we're free. So really easy to use, really easy to get started at. And our end goal is just to help more people get access to health insurance they can afford and they actually want to use.
Mm-hmm. Well, and I think what I found interesting in what you were just saying too is when you said that employers could give the cash tax free. Because I know years and years ago, it used to be you could give reimbursements and it wasn't taxable. And then the IRS changed it. Like if you provide insurance through your company and you're withholding, from your employee their portion of the premium and you pay the difference, Obviously, that's pre-tax, but if you just give a reimbursement, that becomes taxable income. So for it to be able to be given to them tax-free is a benefit, but kind of a surprise too, because of, how the rules have changed over the years.
Yeah, and it really spun out of updated HRA legislation back in 2020. Um, and part of why I started Stretch Dollar was I was seeing a lot of larger companies with some health insurance brokers figure it out up there. And I was like, if it can work up there, I really feel like there's an opportunity for small businesses just to have a simple, flexible offering. There's no minimum contribution and no minimum participation either. So it really is an offering that you can customize to your budget.
Well, that's perfect too. Just from my experience, I used to have an office in California and all my staff were there. And the plans that I could get, for one, like I said, it was expensive. The employees were even saying too, gosh, it's going to cost me so much and I'm going to have such little coverage. But we also had to have, like I said, a minimum participation. And generally, most of the time, we couldn't meet that because some people were maybe still on family plans, or a spouse had insurance, or whatever the situation was. So where you're saying too, there's not that minimum is also a benefit, so that the employers can offer that and be able to meet whatever requirements exist. So that's interesting to hear from you too.
Yeah. We were actually the first company on Stretch Dollar ourselves. And part of that was my co-founder's in California, and she had always been on a Kaiser plan. She loves Kaiser, justifiably. It's a great plan if you live near a Kaiser. But there's no Kaiser in Philadelphia where I live. And so there wasn't really a pathway for both of us to get coverage that we would want and would want to use. But with Stretch Dollar, I was feeling a bit generous, and I was just like, okay, everybody can get $400 a month. Pick the plans you want. And so she's on a Kaiser, I'm on a Highmark. We have another employee in Chicago on a Blue Cross Blue Shield of Illinois, and then another in Texas. And everybody's able to get what they want, which is really hard to do with traditional group plans.
Yeah, I agree with that too. Kind of have that experience. And nowadays too, a lot of people are having more remote teams, and not just work from home where you used to all be in the same place and now you were just at home, but now, people are able to hire in multiple states. And that did bring up a challenge as well too, because before, plans were assuming most of your employees at least were in that same location. So having another option, like you said too, where having people in different states is not really that roadblock either, I see that as a plus as well.
Yeah, I agree. It's just people are working differently than they used to. And so an insurance object invented just after World War One probably isn't directly reflective of the lives we currently live.
Well, do you have requirements based on how long someone has to be an employee before they can also have coverage? Or what are those rules surrounding that type of compliance?
So that's really up to the business. We can start as soon as the next first of the month that you onboard an employee, or you can wait it a bit backwards if you want to install like a 30 or 60-day waiting period. It really is designed to be flexible based around your business needs.
Okay, so do the employers then deposit money like into Stretch Dollar, and that's how the employees get the coverage? And that's how it's not taxable instead of paying it directly to the employee, or how does that work?
So we actually move the funds for you. We move the funds directly from your bank account to the employee's bank account after verifying that the coverage they have is live and applicable.
Okay, perfect. And there's obviously other compliance issues for employers too. Obviously, we're focusing on a benefit, but are there other types of compliance challenges that employers may have that you also can maybe address how they can handle some of those?
Yeah, we one thing we're very cognizant of is that if you have employees, eventually one of them is going to have a health issue. One of them is going to get a big bill. It's just reflective of living in the U.S. I wish it wasn't like this, but that happens. And when that does happen, we're ready. We have a partnership with a company called Resolve Medical Bills to work with your employees to negotiate those claims down. On average, they get the cost of these bills reduced by about 60%. So
Oh,
we
nice.
don't want to just get you set up and then fade into the background. We want to be a resource for you in an ongoing capacity.
Mhm. Perfect. So I wasn't even aware that that type of resource would exist too. So there are other resources that your company has besides maybe that as a resource as well? Or like, what are the things really, if someone comes to you to provide this to their employees, that they would see as benefits for their staff?
Yeah, it's that. It's our brokerage arm that's available to match employees to policies. It's our simple fintech tool, meaning that like you can sort of set it and forget it once you decide how much you would like to offer. And fairly soon, we're going to begin to offer additional policies. So
Mm.
instead of just health, you'll be able to contribute to like vision, dental, retirement. Um, the end goal is like we want to be your one-stop shop for all of your health benefits, all of your
Mhm.
health benefits, but all of your benefits outside there. Because like we've we've met with a few small businesses who are exiting a PEO, and PEOs can be great tools, but they just frankly got too expensive for this
Right.
business. And they were like, "We love your health benefit, but like, what about our disability and our life and our this and our that?" And we're still new. We're about a year into this, but I want to have a solution for all of those problems for people.
Mhm. And well, while you were talking too, and you had originally said like vision and dental and health and things like that too, I was thinking, what about other types like disability or life
Mhm.
insurance? And you mentioned that. So are those also like pre-tax dollars per se, or is it like employees often have to purchase those like with after-tax dollars?
Mhm.
Like how does that work with your plan?
Yeah. So transparently, right now, we really only touch the health benefits. We do have options for vision and dental, but pretty soon we want to layer in these additional options for you. And the hope is we can have it function fairly similar, where everything moves pre-tax.
Mhm. Okay, perfect. So if someone is interested in working with your company then too and setting this up for their
Mhm.
employees, like what are the steps that they have to take to actually set up this account? And how long is that lead time before they can provide benefits to their staff?
We recommend that you get started about a month before you'd like to offer the benefit. We've been able to get people set up as soon as 2 weeks before, but that was a bit of
That's a
a
rush.
fire drill. Yeah. Um, but essentially, the steps are the first one is like we should just decide together what a good offering for you is. We want to make sure that like you feel secure financially in what you're offering, but also that uh, what you're putting forwards is a good match for your employees. So we'll pull in like localized pricing data just because how much employers are offering employees in Philadelphia is different than how much they're offering in
Mhm.
Manhattan. And we want to make sure like the good, better, best sort of type of offering. But you can go ahead and do that without even talking to anyone on stretchauto.com. We have a pricing tool for you. You can generate your custom plan. You then land in our portal where you can integrate your bank account and invite your employees. Once you invite your employees, we'll reach out. We'll help them decide whether or not they want to accept the benefit. There are certain situations where employees can actually qualify for more subsidies on the federal exchange than what employers are offering. And we want to make sure that we get the most premium relief possible, sort of regardless of the source. But
Mhm.
after that, your employees will integrate their bank account and then go into our shopping tool and begin to pick plans. They can book time with a health insurance broker or make their own selections. And after that, we'll reimburse them. And moving forwards, we'll actually move the funds from your account to theirs before the premiums are pulled each month.
Mhm. Okay. So if let's say an employee is participating in a plan through their employer and then they're going to leave their employment and
Mhm.
theoretically the coverage wouldn't exist any longer, but they go to another employer and they say like I had this benefit, can you set it up? Is that transferable so they don't lose their insurance or would their new employer just have to completely start from fresh? They'd have to re-enroll, and go through all of those steps.
So, one of the things I really like about the model we're using is that employees own the policy. So if an employee leaves an employer offering stretch dollar, their coverage wouldn't stop,
Mhm.
just the employer's contribution would. So
Mhm.
any work they've put in towards their deductibles, their out-of-pocket maxes, that remains in effect. They continue to be able to see their doctors. They will be paying a bit more though.
Mhm.
Ultimately, the hope is when they land with a new employer, they'll be able to introduce stretch dollar, and we'll be able to set them up with that new employer's benefits. But their coverage should be uninterrupted the whole time.
Okay, I'm sure that's good news, to someone listening too, who's thinking like, well, if I do it with my job and then something happens or I'm moving or I'm changing
Mhm.
positions for some reason, I could lose my coverage. So I think that's probably really good to know too.
Yeah.
So, like, is there other information on this that you wanted to share that maybe I didn't even know what questions to ask, that would be helpful for either the employer or the employee to really understand how this works?
Yeah, one important piece is when an employer offers these plans, it does kick off a special enrollment period for the employees. So that means you can start with stretch dollar at any point in time throughout the year, and we'll be able to match your employees to individual market policies, even though most of the time you can only get onto individual policies in open enrollment between November and December each year.
Hmm.
So bit of a special pathway in. Um, and yeah, we're growing fairly quickly. About a third of our current customers were referred from an existing customer. So we're getting quite a bit of a word of mouth snowball to it, which makes me think we're on to something here.
Hmm. And while you were talking about that enrollment, which is true, everyone knows usually, there's a couple months, that
Mm,
someone can make those changes and then you're stuck kind of like for the year,
mm, yeah.
But does that mean then if someone starts like a policy in April, their period is always like, before the couple months leading up to April, or like how does that work? So if someone comes in later in the year,
Mm.
maybe they start in October, do they still only have that 2 month period, then whenever that is for that employer? Like, how does that really work?
Yeah, so individual policies do reset on a calendar year timeline, but each open enrollment period, your employees will be able to select a different plan. So we're actually in direct conversations with health carriers themselves. Our end goal is to help your employees find a carrier and find a network they like, and then year over year, like their health needs might change. And that might
Hmm.
mean that they, instead of being on a bronze plan, if you're expecting a baby, maybe we can get you onto like a silver or gold, where your childbirth is covered much better.
Hmm.
We're naturally, as humans, we're pretty fluid. Like things change year over year, and our hope is that we can get you onto like a network, a carrier, and a provider set you really like, so you can develop these year over year relationships with your providers, and we can just make sure that like the coverage is tweaked in a way that
Hmm.
helps.
Right. So are these really just for like the really small businesses and, those who are a little bit larger kind of have the regular coverage anyway? Or is this if someone really has a regular group plan anyway, they're thinking maybe stretch dollar would be better for my company? Like, really, are there any maximum minimums type situations?
So we serve as small as one employer. We've had people set up policies honestly before they even hired anyone, just so they were ready and could recruit on it. And we tend to cap out around 50 employees.
Okay.
At that point in time, you hit some federal
Hmm.
affordability
The
regulations,
ACA.
which is, yeah.
Yeah.
And
Hmm.
so we can do it. It's just, there's a bit more complicated pricing. Whereas if you're under
Hmm.
that, you can really set your own budget. And um, yeah, outside of that, about half our employers are starting offering health benefits for the first time. The other half are transitioning from a group plan that doesn't really fit their needs anymore. So
Hmm.
we see a lot of people from all types. We have, well-funded startups, and we have, horse farms and, shower door installers and all types.
Hmm. Nice. Well, I definitely can see how this would be really useful for those who, again, really want to offer benefits, but have seen like, I'm just priced out of the market. It's just too expensive. And things are getting harder right now, too, as, inflation and, margins are getting smaller and smaller, right, too. So I think this is a fabulous, tool to have in the tool belt for the small business owner, too. But are there any issues? Because I know you were talking about, in one area, insurance is less expensive than another. Are there any issues with having different levels of coverage because people live in different areas and it being seen as potentially discriminatory or something? Because, well, that's not fair because California is getting more, than someone in Idaho or something like that.
Well, we do offer ways you can get a little bit trickier with it. Not tricky, but most of our employers choose to offer a flat amount. Just offering each employee the same amount of coverage. It's honestly what we did at Stretch Dollar ourselves too. But you can offer family scaling. So if you want to cover some of like dependence policies, we can help you do that. And then we are rolling out a way to adjust pricing based off of different locations' average prices. So basically, like, health insurance just costs different amounts in different places. I was shocked to see that like the cost of health plans in Philly is about a third of what it costs in Manhattan. And so that flat rate might not work as well if you have somebody in the middle of the thick of it in New York,
Well, and I think even with as we age, prices go up too. So even if you're saying, well, I'm just going to do flat across the board, that amount of money is going to buy more insurance for someone who's younger, than someone who's older, generally speaking, I would assume.
Yeah. And we have rolled out age scaling for employers in the past too, where basically for each decade we'll add a bit to help them sort of afford it. There's a lot of, it's really quite a flexible structure. And we're trying to walk the balance of like making sure you can take the best possible care of your people while not making this a giant math equation for you.
Right. I understand that too. I think this could definitely be a kind of a frustrating aspect of the business too, and trying to figure out plans and policies. And when you're looking at a group plan too, and they're saying, well, you can pick 3 that you can offer, and what do you offer? And, those kind of things. I know it has, for myself too, it was a little frustrating in the past having to deal with that too.
Yeah. And it makes it harder, honestly, to take care of your people, in our opinion. We had a company in Florida who had group coverage, and one of their employees was a type 1 diabetic and her insulin wasn't covered. And so she had health insurance and was paying $1,300 a week out of pocket for her medicine. And we were able to find her a health plan where it was a $30 copay.
Oh, that's a big deal.
Yeah.
For sure. So I know we're running close to the end of the time we have together. So I would love to have you just say, how can listeners connect with you if they have more questions, they want to find out more about your company, or even enroll?
Yeah, best place to start is stretchdollar.com. We have tons of resources there if you're looking to learn more, or you can go ahead and get signed up in about 10 minutes. So we'd like to save you, those 100 hours of looking through group plans, and then, hopefully get your people a bit better matched up.
Perfect. Well, thank you so much, Marshall, for being a guest on my show and talking on this topic. I really appreciate it.
Yeah, thank you so much for having me. It was a ton of fun.
And for the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to the exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310 534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.